Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Shonda from Blockworks Research and Charlie from Felix. Charlie, how you doing?
Good, sir. How are you?
Good. I forgot that in pre-recorded you kind of have that awkward phase in the very beginning when you have to read the small talk, but we can avoid it. I hope all of the listeners have had a happy holidays. I guess just to dive right into it, Shonda, you've recently been writing a lot about these kind of Hyperliquid hate posts a little bit, specifically regarding outsourcing and decentralized NASDAQ. Do you want to kind of run over it a little bit, and then we can allow further discussion to take place?
Yeah, but first I got to clarify, it's definitely not a hate post, just kind of taking a more objective stance. Now we've had almost a year of this outsourcing model, and this is in regards to something I recently wrote, which was looking at the HIP-1 and 2 outsourcing of spot, right? So in the beginning of the year, this was done with Unit, listing Bitcoin, ETH, and in the beginning, it worked really well. I think Unit did a really good job because there was one team kind of monopolizing it. It was very straightforward. It was efficient. I think there were two risks with this outsourcing model. One was that Hyperliquid is giving the reins to the teams to build it, and you need to have trust that the teams are going to do a good job. And then the second fear was that you might lose some of the revenue because you split it 50-50. And in the beginning, this wasn't the case, right? It was only Unit doing it. At peak, I think we saw that they did 10% of global crypto spot volume. This was mainly with BTC and ETH. And also they just killed it in terms of the new launches, right? XBL Pump. But now that they've kind of pivoted more towards the equities and the perps, I think holes are starting to emerge in the outsourcing model. So if you look at the top 100 spot assets by market cap, only 10 are actually listed on Hyperliquid. And if you think you want to onboard retail, you want to onboard normies from Reddit, and your exchange doesn't even have XRP, BNB, or Link, right? Stuff like that. I think in the beginning, there were a lot of auctions happening. In Q1 2025, we saw almost 25 mil in auction revenue. I think that was one of the main things that Hyperliquid wanted to kind of monetize this asset listing on exchanges in a way that was very murky and not transparent in the past. But now in Q4, we saw that there are barely any auctions happening for spot. Revenue is down to less than $1 million. And there's a lot of confusion about how this is going to go forward, especially if Unit doesn't monopolize it. I see that there's Aave 0, there's AVAX 0, there's BNB 1, ton of different deployers that are doing it now. They're probably not going to share revenue with Hyperliquid. And I think just from a UX perspective, it's kind of confusing, and I don't really know what's the path forward going ahead.
When you say not going to share revenue, you mean they're not going to give 100% of revenue, correct?
Yeah, exactly. So it's the 50-50 split. Right now, Unit's basically using it to buy back Hype, so it's essentially 100%. But going forward, if it's not going to be Unit, there's going to be revenues basically cut in half.
Yeah, I realize we're kind of throwing Charlie into the deep end here with a kind of very big topic and so Charlie, if you want to go ahead and
no, it's good. It's a great topic. Yeah, it's something that we've been thinking about a fair amount. I think there's a lot of different dynamics at play with spot on Hyperliquid. A couple initial ones I would bring up, and I think Shonda, you touched on them briefly, are the cost to deploy these markets, so the ticker cost, just the bare ticker cost, and the lack of taker flow on Hyperliquid. So we can dive into both those briefly and then go into more nuanced things after. But on the ticker cost side, as people know, it costs to deploy a spot asset on Hyperliquid. You have to buy a ticker, win a Dutch auction that runs every 31 hours, and then you can deploy your asset. Aside from any sort of initial liquidity costs per normal, there is a ticker cost that you pay. and that cost can range. But yeah, I think maybe you're pulling it up here or something. But yeah, so these costs can range out. In recent months, they haven't been quite as bad, but when Hyperliquid Spot was just getting started, I mean, maybe you guys can remember, like there was the God ticker that was purchased for, I don't know, it's just under $1 million or over $1 million. And I think in part that it was done with a good intention of, okay, let's sort of limit spam listings or bad listings of spot assets. But also it came with a downside of, I think it limited other deployers coming in period and seeing, look, it costs $100,000 or $200,000 to deploy an asset on Hyperliquid. I'm not going to do that. And people kind of wrote it off. That led to kind of a write-off of Hyperliquid Spot overall, which I think we're still facing today. And so I think there's just some of these kind of unintended consequences that happened from having that as the mechanism for deploying an asset. Along with that, I think we see today there's less of an incentive to deploy new spot assets because there is just less of spot taker flow on Hyperliquid, period. I think Hyperliquid is still viewed almost 100% as a perp DEX. It's trying to go to this platform model. Obviously there's Hyper-VM protocols, et cetera, who have deployed on Hyper-VM. There are now teams building on Hypercore by HIP-3. But it's still very much, it's a perps first ecosystem, perps first place. And so I think on the spot side, there's not as much taker flow on these spot markets. And so it's like, okay, well, if I look at a market like ENA, which unit recently launched, and you see the volumes and it's doing, very subpar volumes, that would not really make sense to do a listing, especially if, you're going to go give back revenue. It's really like, is this even worth it? And so I think, yeah, Gashana, to your point, there is a question there around, well, maybe this is only worth it for if the core team does it because they have other incentives to do it, as opposed to trying to economically align a third party where the incentive might not be there. So yeah, I guess those are some of my thoughts overall. But yeah, I think it'd be good to chat more on the points you brought up, Shana, and also just dive into like the alt space at large, because you brought up Link and XRP and BNB, and I think XRP, BNB are one bucket, but then there's also the more DeFi native alts, and I think there might be a discussion to be had around like whether or what your guys' thoughts are on where those go this year relative to where they went last year, which was basically down only. And so I wonder if that hurts further sort of a building up of a decentralized spot ecosystem, because it's like, well, these spot assets keep losing. And so sort of a nascent theory on our side has been, well, RWAs are the new alts for the near future. But yeah, I guess curious to get your guys' thoughts on that as well.
Yeah, I have. So just to like give some color, Hype 24-hour volume is 61 mil. This is on spot assets. Hype USDC, UBTC USDC is 36 mil. ETH USDC is 21 mil, and then anything after that is sub 10 mil on the 24-hour, which is very low volume. So I have two things. One is regarding the, I don't want to say fragmentation, but like the UI issue that Shonda mentioned, which is, I don't know, BTC USDH and then BTC USDC. It's not even BTC, it's UBTC USDC technically, but the front end shows it as BTC USDC. So does Hyperliquid need to be a bit more opinionated as a front end, is one thing. And that kind of ties into this decentralized Coinbase NASDAQ thing that we can chat about later. Another thing is, like you mentioned, it's like a lot of alts have been down only. And is the issue that they need to keep listing assets that are just launching? Like Monad did okay, but to be honest with you, I think Solana did more volume on Monad day one. Hyperliquid made more money than Solana did on Monad, which is another thing that we can talk about. But I think that's mainly due to the perp side anyway, not due to the spot side. And then if you are only following on those, like if you're only doing newly launched assets, at what point do you do like the backlog of assets that Shonda mentioned, like Link is a big one. I know they're now slowly starting. To me, ENA feels more like not a strategic listing and a backlog listing, but more like the ENA team is quite close to all of Hyperliquid, clearly. So maybe it's like due to that as a reason, which isn't a bad thing, obviously. But it's like there's definitely more things to list before Athena, right? Not anything against Athena. So it's like there's different things to consider, and I guess if you're leaving it in the hands of one team, they might be slow in listing, and they're very much like they want volumes day one, and some of these assets just won't bring them. Like if you listed Link right now, if it exists, I doubt it's sub 2 mil. Like I doubt it's above 2 mil volume. And another thing here is like, do funds want to hold assets on Hyperliquid as an exchange on the spot side, right? Like funds will hold custody of assets on some certain centralized exchanges, not all of them, and they'll hold it on certain blockchains, not all of them. Maybe that's the issue as well. Like maybe people just don't want to buy spot assets on Hyperliquid and hold it on Hyperliquid. And that's where like the majority volume comes from. I assume it's from funds. Yeah.
It might be the case. I mean, I think one thing there is an argument to be made if you can build enough liquidity around these listings that they can be cheaper listings than on these DEXs, which charge pretty egregious fees. Like I think some people think about Robinhood and they think, oh, the Robinhood model, it's free trading, but actually Robinhood does not use the Robinhood model for their crypto markets. Like I think, don't quote me on this, but I believe something like either the base fee or the average fee is something around 75 bips on a crypto trade, which is obviously quite high. And so it's like, well, it doesn't take that much to still earn great upside if you're a spot deployer in Hyperliquid and be significantly beating down that fee. Then it's just a matter of, well, how do you get that liquidity to a place where someone can get, at parity execution on a Hyperliquid spot purchase? That's an open question. And I think also part of the issue with the current listings, like Shawnee, you mentioned the Aave 0 and the Link 0 listings, and I think those listings were done without a third-party market maker, to my knowledge, which obviously there are benefits to that, but a con is it's just inevitably tougher to get that market off the ground. And yeah, it's just it's difficult to then set that as like a precedent for more spot deployers to come in when they see, hey, other spot assets didn't do well. It seems like only unit assets can do well, so therefore I'm not going to deploy any assets. But that, I guess that's part of the issue. So yeah, a lot of different things in there.
Yeah. Another thing with the alt side here is I agree with you on the fees. They can definitely compute. Another thing with the alt side is Felix doesn't have a token yet, and neither does Hyperland. And Kinetic is the only one that has a token so far. I need to check what their volumes are, but I can't imagine it's horrible. And also, it'll just continue to improve, right? Like as they launch new things, they have markets, etc., coming up. So we'll see how it goes. But Hyperliquid as an ecosystem is still relatively nascent. I know a lot of tokens that are trading on other chains are mainly their own native assets, and Hyperliquid's kind of in this weird place where it's just like trying to pull liquidity away from other chains and like making them tradable on its own chain, which is a very like good goal to have, but also eventually these protocols need to launch tokens, and then people are going to have to trade those, and maybe that's a better way to I imagine there'll be more volume on those as opposed to like trying to onboard AVAX and Link and stuff, which I don't know if there'll be a lot of trading volume for those.
Yeah, no, I think it's a good point. Yeah, either you have to do something net new and have a net new offering, or you're just going to try to win on cost. And I don't think winning on cost is ever that fun for the long term. But it's a very good point. So,
Jakob, you have something you want me to pull up?
Yeah, I mean, I don't know if it's still relevant though, but
what did you want to talk about? Run us through it, and then we can switch over.
No, so I mean, what I wanted you to pull up is still just related to what we're talking about, just kind of going over the things that I mentioned in kind of a visual form, like showing the decrease in revenue, how these like auctions were super hyped in Q1, and now as you guys both pointed out, there's not really much demand for various reasons, right? I think also to the point of like just being confusing from a UX perspective to the user that trades, I think it doesn't make sense to list markets if there's not going to be enough liquidity, right? Or at least to display it to the user, because until now, it's been pretty good. The model that we're going to see going forward with various deployers is going to get even more confusing. And I think something that's understated is the risk of custody, right? Because when you take an asset into Hyperliquid and make it tradable, you have to have that bridged asset. And when you're just trading something on the front end and you have no idea how it's set up in the back end, like is it a multi-sig? How are they doing the bridge risk? That's a real risk for trading.
Yeah, I will say one thing is like Solana has done relatively well with being a space for asset custody. I think Base has also done relatively well just because it has the Coinbase branding and name behind it. Yeah, I think as more and more people want to custody assets on Hyperliquid, I think it's the thing that will be improved. I think people forget about how little people wanted to hold assets on Solana, given the amount of downtime that it had for a really long time. And now it's like starting to become more and more trusted. It's an issue that can be solved, and I think will be solved. It's just dependent on Hyperliquid staying up to date as well. Like Unit can't give up on spot listings. It has to just keep listing assets. And I think if there is incentive for it to do so with new listings, it will continue to do so. The main issue there is still like ticker fragmentation. I don't know how else to say it, UI fragmentation. That's like an issue that requires Hyperliquid to be a bit more opinionated. But on the other hand, I mean, centralized exchanges have the same issue, right? Like there's BTC FUSD, there's BTC USDT, BTC USDC, all on Binance, and people somehow figure out which one they want to trade. So it'll all end up being okay. Unless anybody has anything to add on to that, I want to talk a bit about HIP-3, given that we have somebody very close to HIP-3.
Yeah, I mean, maybe before we go into that, I'll just ask one more question pertaining to Spot, and it's gonna be to Charlie. Are you guys thinking of venturing in this space as well and listing tokenized stocks? Because I feel like we talked a lot about the benefits of HIP-3 markets, specifically holding perpetual equities, but there are downsides like funding rate, things like that. And I think having stocks on chain on an order book is something a lot of people want. Is that something you guys are thinking of building out?
Yeah, it is something that we're looking at. Maybe you saw the article I put up, but it's something that we've been exploring a bit. I think overall, like through our experience with HIP-3 and even before, I think there's just a lot of demand for, like you said, holding spot assets or spot equities on chain, and the benefits of, okay, if this is where I can easily buy, the assets that I currently have do off ramp and then go buy at my brokerage. If I can buy those on chain, there could be a lot of benefits there, both on the cost side and then also just ease, convenience, but then also new things you can do with those assets. So a big thing for us is potential to add new types of collateral on the borrow lend side. This is a cool unlock to that it's totally net new from what's been done in DeFi before. So it's something that we're pretty interested in. I think the main question on the spot equity side over the past, I don't know, year, maybe 2 years has been there's no liquidity for these. And it's a pain to try to bootstrap liquidity for one of these assets in an AMM somewhere on Solana. And then there's, maybe $1 million of total liquidity. And I go to try to place a 300K buy order and I'm facing, 10% slippage on my order. It's like, well, that's untenable. Like I'm not going to place that order. I'm instead going to bridge off and buy equities elsewhere. So yeah, that is something that I think once it can be done in a way where you don't have that liquidity issue and you're able to buy basically at parity, take at parity execution for an order on chain versus an order off chain. I mean, it's without a doubt a product I would like to see. And so I think, yeah, we're pretty keen to see like what we can do there.
And this kind of relies on an external party, not you guys bringing spot liquidity elsewhere as well, such that you can.
Right, most likely, yeah. If we were to, I mean, in theory, we could become, an issuer ourselves, and get set up like that. But I think that's a different process than what we're looking at. So,
Yeah, that makes sense. I can't imagine the legal complications that arise with that. If I don't know, it would be an enjoyable process for you guys. I think okay. So HIP-3, we now have everybody competing over the same pie. Some are doing well, some are not doing very well. How do you see the competition shape up? Do you think another thing is USDH is good enough of a now Max Fiege, I still don't know how to pronounce the last name, but he's a friend of the pod and somebody I really, really like. I'm very excited about native markets. I think what they're doing is cool. Do you think it's enough to steal away volume from some of the larger players to offer this fee rebate? And if not, how do you see the smaller competitors compete with the big boys?
For sure. So I guess touching on the competitive landscape first, I think it's been pretty, obvious and apparent that Trade XYZ has been dominant across HIP-3, just market share wise, mind share wise, markets deployed. And yeah, I think they've been really great with it. I think as far as other people coming in, obviously right live now there's us, Eventuals, Hyena, is that it, or is it? And then I get the markets soon, not live yet. And then yeah, obviously like setting the stage. Elsewise, there's one USDC exchange, that's XYZ, one USD exchange, that's Hyena, and then 3 with markets coming, USDH exchanges, Felix, Eventuals, markets. I think it's an interesting landscape for sure. I think it's definitely difficult to find a unique area, but I think it kind of goes to show overall that I think HIP-3 itself is sort of a microcosm of perps in general, in that I think to win in HIP-3 you have to find a unique user base, and the alternatives you can find some sort of product advantage that's distinct enough or durable enough that it can't be easily copied, but just deploying markets, if these markets are so easy to play, I guess you could say in some ways so fungible, that to try to get durability as a market deployer, it's not going to happen. Like if someone deploys a good market and it's doing well, other people will go deploy that market because there are fees to be had. There's at least some revenue to be taken from that, and so people will do that. And then I think the one thing that works well in XYZ's favor is I still think, as you can see in the amounts of supply, USDC has a very dominant position on Hyperliquid relative to USDH. And so therefore, when a USDH market is deployed and that market is doing well, it's very simple for XYZ to go deploy that market as well. And then users who are already sitting in already sitting in USDC to trade other markets, it just is easy to go, okay, I'm just going to hold everything in USDC and I'll go trade this market. And then obviously there's also the benefits of XYZ and speculation around some potential airdrop. Who knows if that's real or not? So I guess those are some different dynamics at play on that end. I guess on USDH, obviously we are very close with Max and Co as well, and have continued to look for ways to support USDH, and they've been very supportive to us too. I think it's a bit difficult of a position for USDH, and maybe we chatted on this in chat in the past, but I'd be good to get your guys' thoughts in it. But growth mode was certainly a bit of a game changer for USDH and the value prop there, given that USDH's primary value prop was to reduce costs, but then costs went to zero for everything, and so it was a bit of like, okay, well, what's the incentive now to go switch stables? Something that we kind of have realized over the past, I don't know, 6 to 8 months. I mean, post USDH stuff, but into USDH is there's a real stickiness around stables and the stables that people hold, even if it's almost negligible or free to swap in between. There's just people, this is my unit of account. It's USDC or it's USDH or it's USDT, and not as many people will shift all around. And so there has to be a real incentive for you to, if you're going to shift your stables, what's that incentive if on the USDH side, if the costs are zero across the board? So we're chatting with them in different ways, and we have different kind of ideas in mind or things to help support that. But it's still early, and I think it's still a lot of kind of open questions. That we're working through, that they're working through, and that I think hopefully will be beneficial to Hyperliquid at large if USDH can do well and kind of bring back some of the value of that float back to hype buying. But yeah, I think like that's kind of how we're looking at it. So yeah, I know a lot there, but yeah, competitive landscape, USDH, some of my thoughts.
I think that makes sense. One thing of USDC is like, I don't know what you guys hold on your personal, but like, let's say if you hold USDC on non-Hyperliquid and you bridge over to Hyperliquid, you're not going to swap into USDH just to buy something, right? It doesn't make a lot of sense. So I think they have an interest. I know Hyperliquid was working on bridging for other assets, or maybe it's already live. To be honest, we haven't bridged in or bridged out in a while, so I don't know. But one thing I'm kind of surprised about is we have USD, USDH, USDC. There's no USDT, which I feel like should have been done for some time.
You know, we chatted with the USDT 0 team on it, and I think yeah, the first thing was like, I guess from the way I understand it, USDT 0 is sort of the extension of the Tether team into DeFi, basically all things DeFi, and we chatted with them, and we were kind of chatting around, you know, sort of incentivization around USDT markets, and I think Tether holds a very firm stance on we take 100% of the treasury revenue, and that is what it is, and like it's not going to change. And I guess like, you know, in our side, obviously, you know, USDH is 50% to hype buyback, so it's immediately different there. And then there's other things that we could do, but I think yeah, part of the reason was just I think they've been less interested in finding ways to make USDT in particular more attractive at getting things off the ground than USDH, USDE, or then obviously USDC is the default. So that one's, you know, an easy one to go with. And then I think probably the other reason is that I think probably the Tether team saw pretty quickly how competitive HIP-3 would be. And so it maybe it didn't make quite as much sense like Athena to double down on let's go find a deployer, because they're looking at it and saying, okay, well, USDC is dominant. What's a unique angle that we can take here to drive something net new? And unless it's like a totally unique distribution partner, I don't really know what that would be. And a distribution partner for them would probably be some sort of SEX, but some sort of SEX is not going to list HIP-3 markets. So like that's a non-starter. So I guess those are my thoughts, but I'm curious if you guys have other thoughts on why no USDT.
Yeah, I would have expected it from USDT 0, and if you're saying it's probably not going to happen, probably doesn't happen. They don't need to. Even USDC is kind of lazy. I don't think the pie is big enough for them. Like they're not I mean, you saw this during the like governance process for the bidding the main picker, and they were kind of lazy. They didn't really do anything. They haven't done anything in months. So I think, unfortunately, the pie isn't large enough yet. Maybe one day it will be, and they'll become more and more involved. But also, from my understanding, USDT is probably relatively close to centralized exchanges as a distribution. I don't know how that dynamic works, right? Like, I don't know how much power one has over the other. Maybe that's part of the reason why they can't go fully into like another exchange. I'm sure they have some form of non-compete or extent like that type of an integration, or maybe they're just super lazy and they don't think it's like worth it, because you have to compete with USDC, and even the USDC amount isn't particularly large on Hyperliquid, so it's like maybe it's just not worth it for them, especially since they went on Plasma and had 8 bill in a week, so it's not like they're struggling to get
right. No, I agree. I do suspect, or I wonder if there's some sort of similar dynamic between USDT and Binance or Bitfinex or one of those other sort of sexes, and it's like a similar relationship like USDC and Coinbase. But I'm not certain on that.
Last time we had you on, we talked a little. Did we talk a little bit about BLP, or was this a private message where I asked you about BLP?
I don't know. It's been too long, so I'm not certain, sir. But we can dive into it now.
What is the? I haven't looked into it, Jakob. Maybe you've looked into it, but if you also haven't looked into it, Charlie, do you a lot of people said that BLP would be bad for Hyper EVM and specifically bad for Felix and Hyperland. I don't think that's been the case. I don't know what you feel like on your end, but to me, it doesn't seem like it's been the case. What do you think people should expect from, I guess, BLP going forward, and how do you see it fitting into the general landscape?
For sure. Yeah, so I guess for context for anyone who isn't aware of the acronym, BLP is Hyperliquid's native portfolio margin system that they've been working on in about maybe 2 weeks ago, week and a half ago, late December. They rolled out the pre-alpha phase with a 5 million USDC, starting with USDC only, USDC supply cap. And then there are also caps on supply and borrow amount per account that were very low. I think it was maybe like 5K supply, 1K borrow, something like that. I think so far there's only been about 3.3 million USDC supplied. So not filling the cap yet, but again, the caps are so low, and it's also just this kind of early testing phase. So I think it's mainly just users testing. But then also the borrow rate is, or the supply rate, the rate you're earning is very low. So I guess like that's a bit of a background. BLP stands for, I guess, borrow lend protocol potentially, but
it was never revealed, right? What it stands for.
Yeah, I don't think it was ever officially revealed, but everyone just started calling it BLP, so ran with it. But yeah, and then I guess to your point around, has it affected HyperVM or Felix quite yet? It hasn't really yet, but it's still very in this kind of gated early phase, and so we haven't been able to see the full extent of how it would affect. I guess overall, our thoughts are there are a couple worlds with it. The first in the piece of context to lay out is that BLP, unlike other portfolio margin systems on sexes, it's more of a traditional, at least from what it looks like right now, it's more of a traditional borrow lend protocol. So which essentially eliminates a lot of the risk from Hyperliquid itself, or Hyperliquid sort of, I guess, liquidation system, if that's what they're playing it. But it's actually other lenders on the other side. It's not like this portfolio or the protocol is minting you margin. It's someone is lending you USDC and you are borrowing USDC to go trade on margin. It's a different workflow. I think on our side, there are certainly a number of Felix users that are doing a similar trade. They're borrowing stables against Hype, K-Hype, other more volatile assets to go trade more in Hyperliquid. There are other use cases for a more generalized borrow lend protocol as well, though, that aren't the same as a portfolio margin system. So it's kind of two separate products there. But so yeah, that is something that we'll be actively monitoring to see, okay, do those flows shift? But the other kind of piece on that is the main catalyst for the flow shifting would be I am a portfolio margin user and I can borrow for cheaper on Hyperliquid or Felix, or vice versa. I can borrow cheaper on Felix than I can on Hyperliquid. And because of that, because of how the system is designed, it'll be a rates question. So if my cost to borrow on one platform is better than the other, it's easier to use that platform. And Hyperliquid is set up connectivity between HyperVM and HyperCore in a way where it's pretty simple to transfer. So if I borrow stables on HyperVM, it's about one button, one click, no gas to get over to HyperCore. So obviously if my rate is 2% or 3% less, I'm going to do that. Vice versa, if the rate is 2 or 3% less on HyperCore, and I want to use just that portfolio margin use case, there's a good chance I shift my borrow there. So I guess, yeah, that's something that we'll be monitoring. I wish it was fully live right now and then we could discuss like, okay, what it's doing, but it's not. So it's, we're just kind of still speculating, but thus far it seems like feedback has been like relatively positive for BLP, like no major like issues that I've heard, but also I haven't heard much. I think it's been pretty quiet, for better or for worse. But yeah, I guess that's my thoughts. So
are you guys planning on building anything on top? Like, if we're saying there's some way that you can, like, there's a spread right between BLP and Felix, is there something that you guys are building to make it easier for the user, or is that something that you're considering building?
Yes, yeah. So that is in the works. In the original, or it's kind of the main announcement message from the Hyperliquid team, they mentioned a couple different ways that Hyper EVM protocols can interact with BLP on the HyperCore side. One of which is kind of if you could do some sort of like a HLP dynamic here where you basically tokenize a BLP position and then you can trade against that. I think that was somewhat interesting, but if HLP is any heuristic, it's like it's an interesting thing in theory, but not super usable or like something that people have a ton of demand for in practice. But what I do think people have demand for is if you can find a way to essentially supply to BLP. And so we're thinking on some different dynamics on that side, ways we can do this. It's not super straightforward. Basically finding a way to do that in a way that you're not going to jeopardize users or being custodying funds or something like that. And so we're thinking through that. But yeah, there should be an interesting synergy where we can allow lenders to get access to BLP as well, and then basically offer the best rates across Hyperliquid's borrow lend ecosystem. So, but yeah, still early on that side, but in the works.
Very good. I have one last question, Shonda, before I'll let you ask. This isn't related to Hyperliquid. Well, it's kind of. With Morpho, if and when Morpho, let's say if, I assume they will eventually, but they decide to take a fee thing, so you guys already have a lot of products, so I don't think you have to worry, and I assume you're going to be focusing more and more on different products. But how do you see that? Because we hear this thing about modular lending doing really, really well. Does Morpho implementing a fee to take into to buy back Morpho, whatever they want to do? Is that an issue? Is that something that you guys have considered? Is that something you've spent some time thinking about?
Yeah, it's certainly something that we've considered and continue to consider. When we made the decision to work with Morpho back in November of 2024, we were assessing a number of options there, and this certainly came up and it was something that we discussed a lot. I think sort of our overall takeaway is that it will certainly depend what that fee is, and then what the trade is in exchange for that fee. If it's what is the benefit on our side, and I think there are multiple ways that the Morpho team has been really great to work with to this point that I think would justify some sort of fee. And then I think there are also different things that they can do to support protocols that would make doing a fee less less of like, okay, I'm immediately going to fork the protocol and go do something else. And I know that they are thinking through that as well. And so yeah, I think on our side though, like obviously it's like a consideration. Okay, like would they do this or when? But we haven't heard any sort of word on if that would be any time soon, or what again, like what that trade would be for. Okay, we're going to return this fee, but this will be enabled as well in tandem. So yeah,
I think that makes sense. I forgot that you guys can just fork the protocol and do your own thing, so that gives you more leverage than, or I guess not you as in like, oh, you guys are definitely going to fork the protocol, but I forgot there's quite a bit of leverage that you can have. And I imagine that they're also thinking for that. I just like, I'm worried about, we don't have to talk about this. The last thing I'll say is that I'm worried that Morpho is going to put itself in a place of Uniswap at some point where like it really struggled to put on the fee switch because it would take away money from other people who are important to them. I don't think that's going to be the case. It's just like something we've been internally thinking about at Blockworks Research, like how these, because with monolithic it's relatively easy. It's one guy running it, so he just takes all the money. But with modular, it's more scalable, but tough to monetize maybe.
no, I think it's a smart thing to discuss for sure. I think yeah, really, I think it'll have to come down to trying to ensure the product is so good that the product, meaning everything from the protocol itself to the kind of ecosystem around curators or people building on top of the protocol to I guess the network of the protocol, and both on a personal level and then also just as far as curators interacting with other participants in the ecosystem, like that has to be so strong that it wouldn't make sense that I'd go elsewhere. I think it's getting to that place, but I'm I'm sure like that's kind of in large part what they are thinking through and want to ensure is the case until they go and then do a fee switch, and then they probably do some sort of like maybe a gradual ramp up on the fee or a smaller fee to start and slowly something there. But yeah, I guess it's kind of like it's like we'll see. But I mean, I think Morpho is a pretty excellent product, and it's been awesome like on our side to work with. So yeah, I guess like that's my thoughts on Morpho right now.
Very good. Very good. I won't put you more through this. I have one last thing, and then Jakob, you can ask. Hyperbeat attempted to do this. They attempted to create, I don't know if they have already, but they wanted to create a mobile app that allowed you to do payments, etc. Aave released some form of an earn app recently. It's not public, it's semi-public. Like you need to know Mark's dollar and he needs to be nice to you. Is this something you guys are considering? Maybe not for the perps product, because I think it would be difficult and you'd have to go into builder codes, which is very lucrative, obviously, but also very competitive. But is some form of a card product or an earn product or something of those sorts interesting, or is it again like too regulatory heavy to the point that you're like, you know what, let's leave it to other people, or it's going to be the back end side?
Yeah, I would say it's certainly interesting, but just not something that we're focused on right now. I think in part it's because sort of our focus has been on like our bio says, our website, like serving the trader. We're focused on basically power traders, like that's our target user base. And so it's less focused right now on like the retail, I guess, normie audience as much. Not to say that that isn't like maybe something that we would go pursue later, but just right now it would feel like a major shift in sort of, okay, what's our go to market on this if we were to do that. And then also same thing on like product wise, UX wise, like we are building for power traders currently. And so to think that we'd also go build with someone, you know, who wants to go earn yield on, you know, $500 and they're just testing out crypto for the first time would be a bit of a different shift. So maybe something that we consider soon, but just not right now. It's not a huge focus.
Okay, that makes sense. I also feel like it's kind of a lot of work to do a mobile app. That's maybe something down the line.
Yeah, just to get back to the BLP, I think another interesting thing that I saw reading through the docs, and I didn't really see it being spoken about much, is that Hyperliquid is going to have a taker fee on the interest, right? Like a 10%, similar to Aave's reserve factor. And I wonder if that's going to be a significant amount of revenue for them, because you then capture like 10% of the interest that's generated. And that's going to be in USDC. So it's kind of a diversified revenue stream.
Thanks to Uniswap for sponsoring today's episode. The Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed 3.3 trillion in all-time volume, handled over 465 million swaps from more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Let's get back to the episode. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
On the topic of that, maybe it's good to bridge into this idea that we've been thinking about, which is Hyperliquid's path forward, right? Like, do they want to go for the more Robinhood style method where they own the front end, where they own the user, where they have these different monetization touch points? For example, they have the BLP that they can monetize, they have the USDH where they get 50% of the revenues, where when you own the front end, you have these sticky users? Or do they want to go for this NASDAQ liquidity layer that I think they were signaling for in the beginning of the year? I think they were like pushing to that more. And I think now slowly they've kind of realized the importance of this front end and they're shifting back to owning the user, monetizing. And I think BLP is a good example for this. So curious what you guys think there.
Yeah, Bach, you want to go first?
No, you have to go first because I need to not say something controversial. Please go ahead.
I'm excited for this, but yeah, I guess to the point on BLP, I agree, and I don't think it's been spoken about. I do think that is part of what I was saying earlier around BLP is like it's a borrow lend protocol. It's not a traditional portfolio market system. Goes to show like the take rate is there. Like it's the same thing on our side, on the Morpho side. Like we have a take rate on borrower interest. That's how we earn fees. Aave has a take rate. Like so, this is Hyperliquid is now they're a curator now. Like they're taking a fee. So yeah, I guess like there's certainly a dynamic there on the NASDAQ versus Robinhood equivalent and which one to lean into. Yeah, I agree. It definitely seemed that the emphasis was more on let's be the back end and the best back end starting the year. And then, you could, call it competition, but other perp exchanges coming online, I think definitely forced a bit of, okay, we need to double down and own the interface as well, because otherwise we're going to lose our user relationship. And I think like you put in the article, which is very well done, may I say, sir. But you put in that article that I think, you show that I think Robinhood was earning maybe 10x the fees per dollar as NASDAQ was, which I think is pretty damning. And obviously, in Hyperliquid's case, it's what they highly tout is these are the fees we make. This is the revenue we make. But obviously, if flow starts flowing elsewhere, those fees will not be there. And so how do we keep flows here? Well, we have to own the user relationship. Either offer the best liquidity, offer the best execution costs, or own the relationship. And ideally, you can do both, but it's like, okay, well, which one of these is more valuable? Right now, it seemed like it's probably the former, owning the relationship. So I do think that we will see continued emphasis on the Hyperliquid front end, the Hyperliquid UI for the foreseeable future. There's been some discussion around like, okay, the UI is getting too crowded right now. There's all these HIP-3 deployers, all these different assets going on, different code assets, different offerings. But I just, it seems too valuable still for them to walk away from that. So I guess, in my mind, it continues to look like decentralized brokerage more than decentralized backend. But I guess we'll see. But Bach, I'd like to hear your controversial thoughts.
I think it's not as controversial. So I agree with you. But I think first of all, Lighter is the best thing that happened to Hyperliquid in a long time. Like I think the fact that Lighter is focusing on shipping things under their own brand, no outsourcing, means that Hyperliquid has to focus on their own UI, which I think is a good thing. Obviously, I think Robinhood is. This is not. I think it's like factual that Robinhood is a better business model than, or Coinbase is a better business model than. My controversial take is that I think Hyperliquid eventually has to decide on whether it's going to outsource or it's not going to outsource. I think Unit is probably the best comparison, like the best example of outsourcing without actually outsourcing in my mind. And I'm sure that I will offend some people about this, but I think most people at least think or semi-agree that Unit is kind of a chosen spot lister that was not democratically elected, and I don't think it has to be democratically elected. It's just kind of outsourced. And I think they should continue doing things of that sort. If they're like, if outsourcing is if they have to outsource, they should do it in that way, as opposed to creating like this base layer. I also don't think that they would enjoy doing that because it means they have to do sales. And to me, the Hyperliquid team doesn't seem like people who want to do sales. Like, I can't imagine Jeff and Ilianzing going around and saying, hey, we have the best base layer built on top of us. Versus like focusing purely on a product. I think that's probably more attractive for them. The negative thing here is quite obvious, is the Hyper EVM side. How much can they compete? I am a seed investor in Kinetic, but it makes so much sense for them to just build out liquid staking. I don't think they will, and I hope they don't, but that is one of the logical conclusions. And another one is BLP makes sense, especially for portfolio margin. Objectively, I think it makes the most sense to just like build it internally as much as possible. So not a very controversial take. I guess the controversial take there is that Lighter is a good thing that happened to Hyperliquid. Ethereum had Solana, and they just kept saying, were more decentralized. I'm glad that Hyperliquid's response is instead to build out core functions. I don't know how they're going to deal with the liquidity, the UI fragmentation. I'll pull it up right now, but this is like objectively not a very beautiful. This is not a this is objectively not a very very beautiful way of doing it. And this is with strict. Like if you do with all, it's a lot more, and not great. So I think they're gonna have to eventually figure it out. And one way for them to figure it out is probably to just rely more on builder codes. But on that end, if you think about it, like how much do you guys trade with in Silico Terminal? Do either of you ever use it? I think sophisticated traders use, like sophisticated as in makers, use mainly APIs and whatever they do, like coding stuff. The prosumer doesn't really exist for perps. It exists for meme coins like Axiom and stuff. I would say is a prosumer interface. I think for example, based one, I don't know what is then official, based 1x, I will call it, is a good front end. And they make a lot of money. I wonder if they make a lot of money because they have a points program, or they're planning on doing a token, or if it's because they actually offer a superior service. I don't think Hyperliquid can rely on that, in which case I think they need to so far they've done a really good job with the UI. Like I think Hyperliquid, even now, Lighter has had the opportunity to copy everything that Hyperliquid has done, and they haven't, but they've done something very similar. I still prefer the Hyperliquid UI. Even though the position sizes that I trade don't really matter, like with the liquidity. I just like the Hyperliquid UI, and like even if Lighter had a points program, that's not to say that Lighter doesn't have a good UI. I like Lighter still, but they've done a good job. I think they have to figure out how to do the UX fragmentation. But apart from that, I think it's mostly about they're gonna have to eventually build up more and more in house, and that's not necessarily a bad thing. It means that protocols may struggle a little bit eventually. Some other protocols, and we saw this like I don't know, not like there are some AMMs that are launched on Hyperliquid, not recently, but before, that weren't necessary, and they made a lot of money, but like that was already probably too much for them to make. Like the blockchain needs to monetize as much as possible by launching its own products, or else you get. Day one, 26th of November. When did Mon launch? I think 26th of November. Solana made $13. It's not sustainable. Like you need to have your own ways of making money, which is allowing people to trade, BLP, and any other thing, and like having controlled, outsourced protocols that will ship all of the revenue into your main token.
Yeah.
So no,
it's interesting. That country. I guess I'm curious on that end, and I think maybe you guys or someone at Blockworks put out a piece on this a while ago, and then it was resurfacing. But I'm curious to hear your guys' thoughts on the buyback question and the.
Yeah, this is. So I will first of all say two things. Blockworks Advisory and Blockworks Research are two separate entities. I don't really talk to Effort Capital that much, or anybody from the advisory side. They mostly work with protocols, and most of our work is with the investor side. And on our end, buybacks, I think still today, are the most efficient way to show investors that there is no difference between your token and your equity. Now, in the future, this might change. There might be regulatory changes. And one thing I agree with Effort Capital is that one of the misses of like regulatory is making token equity and like giving people the same right. It is impossible to do at this current stage of regulation, and it's going to need a lot of KYC stuff and etc. to make it work, which I don't know if we even want it to work. Like there are still some people who don't want a KYC, including me, which is fine. But so on that end, I agree that if token was equity legally, there's no need to ship everything into the token. But until token is equity legally, you need to show that the token is not some worthless. Like, it's a response to everything that's happened over the past, let's say, 5-6 years in crypto. Because I think before nobody really even thought about it, but like at least over the past 3 years, it's been more and more a conversation.
Yeah, I'll just quickly give my take as well from like more of the investment side of things. It is a reaction to like these unsustainable tokenomics and just so much supply being dumped from VCs that for a period of time almost everything felt uninvestable, right? Like you have either it's overvalued, either the tokenomics are terrible, or there's no value being directed back to the token. And if you just say, okay, easy, we're taking all the revenue, putting it back into the token, it's a very easy mental framework. When you evaluate something, you can see, okay, they're making X amount of revenue. There's this much percent of supply circulating. It's going to take out X per year. And it's like, gives you confidence that even if there's no marginal buyer right now because of the sentiment, that because of the product's revenue, it's going to eventually get to a point where there's buy pressure just from the product they have.
So I guess you would say it's less of a question of, is this sort of the best use of capital, which I think is what some people are going to question. Like, oh, is there something else that's higher EV to do with this capital, and more of it's sort of table stakes that you have to demonstrate to users that this token has some inherent value, and this is how you demonstrate it, and this is the only way. So therefore, this is what it must do. Is that kind of, I guess?
I think maybe a better way to do this would have been like if Hyperliquid said, okay, so it's 99% right now buybacks or 98%, whatever. If Hyperliquid is like, look, on average, 1 to 2% goes to HLP. We will take 5% for whatever growth, and then we will buy back the token with the remainder. Like that is probably a better way. But on the other hand, I don't think Hyperliquid's a team that is really struggling for cash. And they don't like. They have kind of done what Effort Capital David was mentioning in that tweet, which is they are giving away 50% of fees for certain products for growth, right? Like, Shauna, you have those figures about how many new users come from builder codes, and I don't love like doing the user check, because oftentimes it's not completely accurate, but a significant amount of, maybe not volume, I think it's like 7-8% of volume comes from builder codes now, which is not a very like low percentage. I can't imagine non Binance front ends make up 8% of Binance's volume. Like that to me doesn't seem reasonable. So I think there is some growth with that, and they give up 50% of whatever like spot assets sometimes, although that hasn't been the case. So they are giving up some revenue for growth. Is there a better way to spend it? Should they be buying 98%? Probably not. But it's like it's an outcome of the times. It's a consequence of the times. Like we had so many years of no relevance into equity, no relevance of tokens that I guess Hyperliquid had to come out and say, look, like all of it goes to the token. There are some other teams I think that probably shouldn't have done it. Like nobody expects. What was the other one? I think Jupiter to do programmatic buybacks. They should have, but they still had enough cash to buy out a bunch of other products. So it's a difficult thing. Like I agree with the general sentiment that you can save some money for growth. I think they should. I think Hyperliquid eventually probably will, and the token will go down for a bit. But in the long term, the market will realize it's the right decision to make. But also, like the argument there was, tokens have gone down despite the buyback. I can't imagine how much tokens would have gone down if there was no buyback. So I think that's another thing. Investors care about what happens to the revenue and the supply unlocks realistically. Like that's the biggest thing that they care about. And it gives them clarity on what happens to it. I think it's a much better way to do it than the way that some other protocols do it. But I imagine in the future there will be more and more better ways. If we just had more transparency across how teams spend their revenues, I think Hyperliquid wouldn't have had to do it this way.
Mm-hmm. Yeah, it's interesting to think of the world where Labs launches in that uh, a non-opaque DeFi valuation world. But yeah, I do think there's a point to it, like you mentioned, where it's not like Labs is struggling for cash, and so if they wanted to go invest in different initiatives, it's not that they're hindered from doing so because of cash. I think it's more focus and an active decision on here's what we want to focus on, or whether they want to maintain just a small team with limited focus, or they want to expand to some, Coinbase level organization. I don't think necessarily they're, at least in taking the next steps after that, if they did want to expand, I don't think they're limited by cash per se. It's more focus and an active decision. But yeah.
The thing is that everybody who likes to run their organization differently, like Charlie, I assume Felix is like, you guys have your own way of doing things, and you either like want to build everything in house, and that's like very clearly what you want to focus on, or maybe you're like Coinbase, where you just want to like acquire, or like Jupiter also does this. They just buy up different products and bring them under one umbrella. To me, Hyperliquid seems like they want to build out everything in house, and that's like their ethos. So maybe they need that, but Jupiter probably needs the cash, so they shouldn't do automated buybacks. It's a very complicated. It's like very easy to look back now that prices have gone down and said, "Oh, you shouldn't have bought back," but it's a symptom of what the times were. We'll see how things change going forward. Jakob, unless you or Charlie have anything else to say, I think this is probably a good time to cut it because people tend to lose attention after minute 60. What do you think? Anything else you want to say? No? Charlie, always a pleasure. I'm glad we covered more of Felix today than we decided, because I feel like you come on the pod and you're so kind and we just talk about Hyperliquid, but I'm happy with my Morpho question. Because I don't really get lending that well, so I'm glad that somebody's able to explain it to me a little bit.
Anytime, sir.
But yeah, thank you again for coming on, and to our listeners, I hope you all had a happy new year, and see you all next time.
See you guys.